Cryptocurrency might be fun, but not everyone is a fan. Laugh if you want, but the US government is currently eager to demonstrate that it is tough on crypto crime or the petty mischiefs that have invaded the system. But what if this approach by the government is stemming from only a standpoint of dislike for the digital asset class? Nothing is for certain, right? Flashback to 2017, cryptocurrency was winning everyone's hearts. Every corner screamed crypto, and various influencers applied concerted efforts to promote it. It was considered the year of cryptocurrency, but not everyone was interested. Led by Bitcoin, the aggregate cryptocurrency market cap grew by more than 800% at one point that year. Bitcoin comprised nearly half of the aggregate cryptocurrency market cap by itself. So why was there a sudden surge in digital currencies in that particular year? Some said it had to do with the blockchain technology that facilitated most cryptocurrencies. Blockchain is nothing more than a digital decentralized ledger that records transactions without the need for a financial intermediary like a bank. More than 150 organizations tested out the version of Ethereum's blockchain network through the Enterprise Ethereum Alliance. Bitcoin also completed an upgrade to its network known as SegWit 2x, which was configured to boost capacity while reducing transaction fees and settlement times. The declining US dollar was another catalyst for Bitcoin and other digital currencies in 2017. The dollar hit more than a 2-year low against the euro and more than a 1-year low against a host of other currencies. While that was expected to put a smile on President Trump's face, as it should boost the US exports, it was turbulent news for investors who saw their cash devalue relative to other currencies. Bitcoin scaled higher than other cryptocurrencies, however, Bitcoin's pricing was predominantly left to retail investors, who likely traded based on emotion rather than logic. It was quite ideal since the don't miss the boat mentality was greatly involved. In that same year, while numerous Bitcoin enthusiasts and pundits came out with price targets of 10,000, 25,000, and even 1 million on Bitcoin, other respected finance moguls maintained an exceptionally bearish view of Bitcoin, if you were unsure if it holds any value at all. Again, not everyone is a fan of cryptocurrency. The most revered stock investor in the world and the greatest buy and hold investor of our generation, Warren Buffett, believed that Bitcoin is something of a sham. In an interview with CNBC back in 2014, here's what Buffett said: "Stay away from it. It's a mirage, basically. It's a method of transmitting money. It's a very effective way of transmitting money, and you could do it anonymously and all that. A check is a way of transmitting money too. Are checks worth a whole lot of money just because they can transmit money? I hope Bitcoin becomes a better way to do it, but you can replace it in a bunch of different ways. The idea that it has some huge intrinsic value is just a joke in my view." Warren Buffett, as you can see, was not exactly correct about Bitcoin, given that the digital currency significantly increased in value despite his opinions. Nonetheless, Buffett raised an exceptionally good point that modes of payment and even blockchain technology had a very low barrier to entry. There's not much to protect these digital currencies against competitors swarming the space. Also, Jamie Dimon, the CEO of the largest bank in the US, JP Chase, might be Bitcoin's biggest critic of all. In an interview with CNBC at his annual Delivering Alpha conference, Dimon didn't mince his words when he referenced Bitcoin as a fraud. He said, "It's just not a real thing." At a separate conference, Dimon also said, "It was worse than tulip bulbs. It won't end well. Someone is going to get killed. Currencies have legal support. It will blow up." In addition to these opinions, Dimon noted that if any JP Chase money managers were to trade or hold Bitcoin, they would be fired in seconds. It was pretty evident that Bitcoin represented a threat to traditional banking if it continues to grow in popularity. But Dimon might also be correct that without any sort of central backing, legitimizing digital currencies like Bitcoin would prove to be impossible. The Nobel Prize-winning economist Professor Paul Krugman was not left out. He had serious doubts about the long-term survival of Bitcoin for years. Back in 2013, Krugman penned an op-ed for the New York Times in which he said, "So far, almost all of the Bitcoin discussions have been positive economics. Can this actually work? And I have to say that I'm still deeply unconvinced. To be successful, money must be both a medium of exchange and a reasonable, stable store of value. And it remains completely unclear why Bitcoin should be a stable store of value. While Bitcoin has been the asset of choice instead of gold for some investors, it is not a true finite resource like gold. Bitcoin's protocols could always be modified, implying that more than 21 million coins could eventually be mined. Plus, without government backing, nothing is placing a floor underneath the value of Bitcoin." Although these finance gurus have been dead wrong about Bitcoin thus far, their theses are quite valid. Bitcoin has been driven higher by emotion and mere feelings. The technology behind it is relatively easy to duplicate, and its decentralized nature makes legitimizing the currency all that much tougher. Right now, post-FTX, the US government is ready to implement certain policies targeted at regulating crypto, with the most painful strategies according to many. This is not being negative or unreasonably pessimistic, but some might not survive these moves. Cryptocurrency and blockchains have indeed emerged as an innovative and exciting technological development in the recent years. However, due to their novelty and uniqueness, many governments around the world have been playing catch-up to establish a clear regulatory framework for this burgeoning asset class. It might not be hatred, perhaps it's just a concern to curb the situations that are fast spiraling out of control. In the US, crypto operates within an opaque framework with no specific agency responsible for oversight. True, right? As such, a piecemeal approach to regulation has started to unfold. But with multiple high-profile lawsuits targeting companies such as Coinbase and Binance already in 2023, this reality might be beginning to change as regulators start to present an undivided front. There is just one problem, though. While some countries have implemented comfortable and supportable legislation to embrace the potential economic benefits that come with cryptocurrencies and blockchain technologies, these recent lawsuits seem to be targeting the industry as a whole. It's like throwing out a whole apple which only has a few patches of rot. Now, there is growing concern that the US is on the cusp of imposing stringent and sweeping regulations, which will likely impede the sector's growth. If this path is taken, it will not only hurt crypto, but the economy as a whole. A certain high-profile Bitcoin and crypto investor has suggested that the recent banking crisis may have started with the state-level campaign against crypto-friendly banks. Now, influential Democrat Senator Elizabeth Warren has revealed that she is building an anti-crypto army as part of her re-election campaign, following a warning from Coin Center, a crypto lobby group, that a crackdown on TikTok could pave the way for a Bitcoin ban. "I'm in this fight to put our government on the side of the working families," she posted to Twitter, embracing a quote from a recent political profile that she's building an anti-crypto army. Warren, who's on the Senate Banking Committee that oversees the SEC, has been at the vanguard of a slew of anti-Bitcoin and crypto bills that have been introduced over the last year. Rogue nations, oligarchs, drug lords, and human traffickers are using digital assets to launder billions of dollars in stolen funds, evade sanctions, and finance terrorism, Warren said in December, alongside the introduction of the Digital Asset Anti-Money Laundering Act, added that the bill would help close crypto money laundering loopholes. There are a dozen opinions and twice as many misinformed reasons being shopped around by the banks and the government as to why crypto should be severed from the existing financial system. So let's just pretend that there was an alternative currency that was resistant to inflation, could be stored securely on phones, and sent to anyone at any time without a fee. Wouldn't that be something that is worth exploring? This current age cannot resist unraveling such a mystery. Now, I understand, change is hard, but making the same mistake over and over again is significantly worse. We have lived through the repercussions of putting our life savings in banks and being wiped out in the great financial crisis of 2008. This is not about making crypto the official currency of tomorrow, but we shouldn't be waging a war against it. Of course, this already sounds like a war. We shouldn't be discouraging banks from holding it or people from buying it if they want to. We shouldn't be stifling innovation. Just blot out the bad actors, the players that make the government perceive crypto as a mischievous setup. The crypto tower is already high up in the sky. Crumbling everything is not without grave consequences. But we'd like to know, what are your thoughts on this? As that will do it for today's video, make sure you click on the subscribe and notification buttons, and we'll see you in the next video.